Well, good morning, traders, and welcome to FollowMeTrades.com Saturday scanning session. I'm Dean Jenkins, founder of FollowMeTrades.com, and it's good to have everybody here. All right, I'm looking forward to this. Before we get started, this is going to be a real interactive session, so I'm definitely hoping to answer any questions that you have, and later in the session to take a look at any symbols that you would be interested in. Hey, good morning, Benjamin, Oswald, Nick, you're welcome, Mike, everyone else, good morning. So make sure you can locate the chat window in the Zoom webinar platform. There's a button there, there's a raise your hand button, which means nothing. So you can ignore that one. But there's also a little button for a chat, and it brings up a chat box. And go ahead and make sure you can find that, and to make sure you find it, you can use it. Go ahead and type in where you're calling from. It's always fun to see where different folks are calling in from. Hey, we got Mike C, Mike K. So, all right, Mike A from Canada. Oh, Maryland, Florida, Olympia. No way, Ellen. That's where I'm presenting from. That's where I live. It's Olympia. UK, PA, Roanoke, Phoenix, Charlotte, Alaska, Alba, Iowa, South Africa. Hey, Danny, hope I said that right. Frostbite Falls, Minnesota. Well, I bet the name is apropos today. I bet there's a little frost there. Athens, nice, Spiros. Netherlands, Newport, Oregon. Hey, Jeff. Detroit, DC. Very good. Toronto. And again, I see some of you are raising your hands. You're welcome to. Feel free to play with those buttons, but it doesn't really mean anything. The best thing to do is to type your question into the chat box, to your question or comment, and then I can address it. Birmingham, New York, Maryland. Nice. We got people from all over. Florida. Hey, Kim. Give it just another minute. I know several people are logging in. Ontario, Karen. Hey, Karen, good to have you here. Cambridge, UK. So let's see, what time is it in UK? I think it is 4 p.m. So good way to spend the afternoon. Ashley. Good morning, Nancy. Neil. Dimitri says no audio. Well, Dimitri, I'll give him the answer, but he can't hear me. I think the audio is working good for everybody though, right? Because you're answering my question, so it must be working. Yeah, Benjamin says you hear it fine. Audio is good, okay. All right, well, hey, we got a good room here, and I want to make good use of your time, so I'm going to go ahead and keep going. I'm going to press on, get this presentation started. Let's go find some trades, right? Before we do, just a quick disclaimer that I'm a trader. I'm not a financial advisor. I'm not giving financial advice. Everything I'm giving here is for education and information purposes. I'm going to be sharing trades that I like. I'm going to be looking for some more. I'll share my criteria, my setup, my parameters, right? And I'll talk about trades that I'm interested in taking. Whether you take a trade or not, it's your decision, right? Only you know what's appropriate for your situation, what your tolerance for risk is, your overall situation. I have no way of knowing that. So I share what I do. Each person makes their own decision. I'm not giving financial advice, so please don't take it that way. These are my ideas. I share what I do. So just a quick introduction. Some of you may not know me yet. I hope to get to know you. But I'm Dean Jenkins, founder of FollowMeTrades.com. I've been trading and investing about 20 years. Started when I started working at Intel Corporation, 1993. And they gave us incentive stock, employee stock purchase, incentive options. And it went up like clockwork, right? And it got me real interested in the potential of the market. And since I was in stock that went up and split and doubled every year, I thought I was a pretty good investor, right? During that time, I got my MBA from the University of Washington. And for a long time, I was a fundamental trader where I'd analyze, earnings statements and products and all that stuff, everything I've been taught in business school. I got mixed results, and it was frustrating. I traded through the dot-com thing and won some, lost some like everybody else. Yeah, this is totally recorded, and I'll send it out to everybody that registered. So I got mixed results with fundamental trading. It was really frustrating because it'd be a great company with great results, great earnings, and and the stock could go down. And what's going on with that? Right? Why didn't it go up? And then a kind of a lousy company that should be going down, it'd go up, right? And I always thought there were patterns in the market, maybe more to it than just the financial statements. But I actually gave up on the market for a while. In 2007, I was so frustrated getting mixed results that I went to cash, right? I just said, pull my money back to cash and go, I don't really have an edge here, and we're going to use that word edge a lot, right? So I'm just going to go to cash. Well, it was a good time, right? Because I pulled out right before the crash, not because I was a genius, but because I was frustrated. Afterwards, I just couldn't stay away. I mean, the market's too intriguing, right? I couldn't stay away. So after 2009, I got in. I was in some great winning trades. I got into Bank of America at $5, went up to 12, less than a year. But it was stressful because I didn't have a trading plan. I didn't have risk management for sure. I didn't know what to do. It's like, wow, I've more than doubled my money. Should I stay? Is it going to go higher? Should I get out? Am I going to give away my profit, or am I going to miss future profits? Stressful, right? So I got interested finally, right, in technical trading and learning about it. And about 2010, boy, I made lots of mistakes. I went out and bought every indicator possible. Went down some paths that turned out not to be so fruitful. But I finally got a system together. And the key thing for me in turning the corner of profitability as a trader was having a mentor, somebody who had been there, who had done it, who was getting good results, and that I could connect with. That was Bennett McDowell of traderscoach.com. So Bennett spent a lot of time mentoring me, and we've remained great friends and work together a lot now. But that made just having a voice of reason, right? Point me on the right path, kind of challenge me when I was going the wrong way, made a big difference, right? 2012, I finally settled in on the current trading system I'm using now. So that's nearly 6 years ago, and started getting consistent profits. 2015, I launched this company. I actually started doing coaching for Bennett's company after I'd gotten to a point where I was getting consistent results, and I was doing coaching for some folks. And then that evolved into my own business that I launched in 2015. So it's been a great journey. I've been having a good time. Best job in the world. So here, stay with me. Here's what I'm gonna do. I'm gonna explain the setups I'm looking for. I'm gonna take a little time on this because I think it's important to, if we're gonna go look at a chart, I should tell you what I'm looking for, because I'm gonna reject nearly every chart I see. Probably 1 or 2 out of 10 to 15 charts that I look at have the setup I want on average. I'm gonna reject a lot of charts because I want the best setup. I wanna have an edge. I want probability on my side. So I'm gonna explain what I am looking for. I'm going to walk through scanning technique, how I can narrow the market down, right, from the 6,000 or 7,000 symbols that are available to a manageable number to look at. I'm going to go find some great trades. I've got some candidates here, a scan that I'm excited about. I want to share with you. Then I'll look at some stocks that you're interested in. Who knows? I may love some of your ideas. In some of these sessions, I walk away with tradable stocks. So it's a two-way street. So I look forward to that. But and I again. Just, the odds are, if I only find 1 or 2 trades out of 10 to 15 charts, I may not be excited about your trade, but who knows? We may uncover the next breakout winner. So stay with me if you want to get the most out of this time. At the end, we'll end up with some nice trading ideas. We'll take a look at yours and see if there's some more there. If you're multitasking, you might miss some really valuable information. So if you want the most out of it, stay with me here and let's go do this thing. My trading resume, just, real quick, if you're going to watch somebody, you ought to, they ought to have a resume. They ought to have some results, make it worth your time. And so I believe in complete transparency. All right. So I'll write on my homepage, followingtrades.com. I put the results. We just closed 2017. So here's the annual results we're getting. So you notice on my webpage, there's no Lamborghinis, there's no yachts, private jets, none of that. We're talking about, realistic. We're not talking about, hey, you can take $1,000 and be a millionaire. We're talking about solid, consistent gains that year over year is going to grow your account into a pretty substantial bit of money if you manage it right. So last year we ticked up just a little bit from the previous year. We beat the S&P 500. So we got 24.23. The Dow beat me. I mean, the Dow was on fire, right? But most years I've handily beat it. Every trade that is included in their zero results. I'm taking it in my own account, my own money, and here's the details of every single trade. So again, I believe in transparency, and I believe that if I say I'm doing it, I should be able to back it up. So I have an external CPA firm audit my results every quarter. So I started in Q2 last year, so here's the results. So when I put it on my website and say I traded that in my account, I have a CPA firm who I send my brokerage statements to, and they write a report about whether I did or not. So that's my resume. All right, I'm going to turn the camera off now. You've seen me. Hey, now we can get focused on the material here. So I think you need these three things. I think these are essential if you're going to be consistently profitable as a trader. And we're going to keep coming back to these as we scan for trades, as we look at charts. Audio's mangled. Is it just you? I hope it's just you, Arnie, Amy. Nobody else has said anything about it. Vernon, do I use my methodology for crypto? Audio's still good, says Nick. Yeah, of course crypto is going to come up. I'll show you a crypto chart, okay? I promise. For me, you know, who knows, I may lose. Some people may hang up now. For me, the crypto markets are too nascent. They're too new. They're too volatile. I don't have an edge. So I'm not interested in trading crypto at this time. Right? I've actually had a couple customers cancel their subscription and go, you know, I just got to go trade crypto. I'm going to stop doing stock and options and stuff. So, okay, it's fine. You know, each person's got to do what they think is right for them. It's too immature a market for me. And you know, I look at it and I go, boy, 10 years ago, before I really had a trading system and was a disciplined trader, I'd have been all over it. I'd have been chasing it like mad, right? Now that I've had years of consistent results and understanding what it takes, I'm not interested, right? I'm just not interested. I am, you know, kind of intellectually and following it and all that kind of stuff. We'll bring up a chart here. I'm not interested in putting my money into it just yet. So if I just lost some people, I'm sorry, but that's the truth. And, you know, that's where I'm at with it. So I think you need, and why? Because you need a great probability outcome, high probability outcome in your trading. You need great reward to risk ratio. You need risk management, trade management. I think regardless of what your trade setups, I don't care if you're using the indicators I use, if you're using, you know, MACD or RSI, whatever, right? You got to have trade setups that give you an edge, that have high probability outcomes, and that it's been proven, right? Then you got to take trades that have a potential to win more than to lose. You got to be able to manage risk, the downside. You got to be able to manage your trades so you get the most profit out of your trades. I think those things are essential. So let's talk for a minute about casinos. This is fun. So casinos, right? These people are having a ball. They're rolling the dice there at the craps table. There's alcohol. They're smiling. They're laughing. You know, it's a great entertainment. But are casino owners gambling? Absolutely not, right? The players are gambling. The owners, they're in business, right? They absolutely ensure control of two variables. And this does relate to our trading. We're going to make the connection here, right? They control two variables very carefully. Can see slides only, Dean Jenkins. You guys see these slides okay? I hope it's working. No problem. Okay, good. Okay, so casino owners control probability and they control risk, right? So consider roulette. Simple game, right? It's got a wheel with numbers on it. You spin the thing, the ball drops. It's got numbers 1 through 6. Half the numbers are black, half the numbers are red. And you got even odds, right? 50-50 chance of it being black or red or even or odd. And there's a 1-to-1 payout. So you bet $10. If you win, you get 20 bucks back, right? It's a 1-to-1 payout. Simple game. But what's up with these green spots here? 0 and 00. Because the rest, red and black, you know, 1 through 36. What's up with those green spots? Those green spots, 0, 00, they change the odds from 50-50 to, from a 50-50 chance of winning as a player to, as a player now, because we've introduced 2 more spots, that if you're playing black or red, even or odd, don't win, right? They're losers. Now your odds of winning are 47.5 on every spin. There's a 47.5% chance you'll win. There's a 52.5% chance you will lose. The casino makes all their profit on that edge, on that 2.5% edge. They will win 52.5% of the time, and that is enough for them to be wildly profitable. How crazy is that, right? So they control the probability of this game by introducing the two stupid green spots, right? And they know, some player may show up and spin 10 times and win 6 or 7 of them and walk away with, a net gain. They don't care. That keeps everybody else playing, right? But they know over 10,000 spins, over 100,000 spins, and on, they have an edge. And they know they will win more money than they will lose. And that's how they make their living, right? And they want you to play. They want you to spin as often as you can. That's why they give away free drinks and comp you meals and all kinds of goodies. Come in the room, spin the wheel lots of times, right? They also, they control profit via 2 mechanisms: ensuring a probability edge, which they do with the green spots on the roulette wheel, and they control risk, right? So probability is controlled via the 2 green spots. Risk is controlled via the table limit. They don't allow you to bet, right? There's a limit on how much you can bet per spin. You cannot go in and lay down $1 million on black, right? Because there's a 42.5% chance you might win, and they're going to have a big, huge hit of $1 million. And that's unacceptable to them to have that big of a hit. So they'll go, whatever it is, different tables, different casinos, different limits, but they, hey, it's $100, right? You can only bet $100. Because if you win $100, they lose it. It's okay. Because over the next 10,000 spins, they're going to weigh more than make it back up, right? So they control probability by rigging the game, right? And they control risk by table limits. So that's just a fun little aside, isn't it? I hope you appreciate that, because it applies. So why not be the house, right? That's the whole point of this discussion is, in our trading, why not be the house? Why not make sure in our trading we have a probability edge that we control risk, just like the casinos do, so that some trades will lose, some trades will win, but we have an edge, and over time we're going to be profitable, right? So to do that, how do we make sure we have probability, right? By great trade setups, proven trade setups that have a better than 50% chance of winning. We have an edge, right? There's a high probability outcome, and we have to make sure there's a good reward to risk ratio. Because having trades win a lot that win small and they win less than the losers lose, that doesn't get you there either, right? We'll look at some examples on charts. So we control probability of outcome through great trade setups that are proven. So I use a combination of indicators here in my trading. I am primarily focused on Elliott wave counts, right? I believe that what Ralph Nelson Elliott researched and wrote about in the 1930s is still true, and that the market is driven in the short term by emotion, right? Benjamin Graham also confirmed that. He's the guy who was the very first person to do research on value investing. He was the biggest influence on Warren Buffett. He said, hey, in the short term, the market is a voting machine. In the long term, it is a weighing machine, weighing earnings. But in the short term, it's voting. It's based on emotion. And that emotion in the market, right, short term being a year or less probably. Yeah, I think, Dimitri, maybe your thing is locked up or something, because everybody else said the slides is good. I'm sorry. Anyway, in the short term, the market is driven primarily by emotion, people responding to new information coming out, right? I also believe in most of the efficient market theory that said, everything about the company, all public information is reflected in price, right? But I also believe it moves in waves. It moves in waves of optimism and pessimism, and that's what Nelson said in his Elliott wave. Ralph Nelson Elliott said in his Elliott wave theory. Right, the thing's been way overcomplicated. Elliott wave theory is simple, right? It is simple, and you have to keep it simple. And there's a book called Elliott Wave Techniques Simplified, written by Bennett McDowell, my mentor. And I love to say, I didn't write the book, but I helped. I did write a chapter in it, right? Elliott Wave Techniques Simplified. So Elliott Wave is the core of my analysis. I'm looking for an impulsive move up of optimism, a corrective wave down, a shift of momentum temporarily, and then a continuation of the original trend, right? And it can go in the reverse, right? A big move down, a correction up, and then a continuation down. There's only 3 trade setups I look for. I use Ichimoku Cloud to confirm trend changes. So when Ichimoku Cloud breaks through this shaded area and stays above it, the shaded area is called the cloud. It's derived from these 2 lines, Tenkan, Kaijun, right? They're very similar to moving averages, calculated a little differently. Moving averages are based on average closing price of some number of R's. Tenkan Kaijun are based on average of the highest high, highest low in some number of R's back. And then from that, we derive the cloud. And when you break through it, just like when you get price breaking through moving averages or moving average crosses, right, indicates a trend change. And it also projects into the future very strong support area, right? You see how price comes down to the cloud, but doesn't break through it until the doggone thing changes. So, yeah, you're welcome. Hey, Mac. It is a great book. Yeah, Elliott Wave Techniques Simplified, Bennett McDowell. It's on Amazon. It really should be on every trader's bookshelf. Okay. Elliott Wave, here it is, picture. We're only trying to trade wave 3, wave 4, wave 5, and only 4 if it's big enough. Yeah, someone's saying there's no audio. I think everybody else is good. Man, the gremlins are in the machines today, huh? I'm just going to keep pressing on unless I get a bunch of people saying there's an issue. All right. So Elliott Wave, we're trying to trade a big impulsive move, right, where there wasn't one before. It is so easy to spot on a chart. If you go back here, some people scratch their head. This is an Elliott Wave 3. Why? Because it's a big move, right? This thing was channeling, bopping along, broke out into this big, huge trend. That's an Elliott Wave 3. It can be easier, right? At some point, that's going to correct, right? They always do. And they typically, the probability is to correct into a Fibonacci retracement zone. And then after that correction, it will resume again. The collective investor psychology moving between optimism and pessimism in natural sequences. And interestingly enough, it quite often moves to Fibonacci levels. It retraces to a Fibonacci level. It extends to a Fibonacci level. Right? There's a probability. There's an edge there. It's not guaranteed. It's not certain. Right? I'd say it's a 60, 70% probability. Right? So I also use Dow theory, and just to tell me when are we still in a trend, right? Because a trend, according to Dow theory, written by Charles Dow back in the early 1900s, end of the 1800s, right, 1899 or something like this, still holds, right? Still makes sense. Uptrend is higher highs, higher lows, higher highs, higher lows. Downtrends, lower lows, lower highs, lower lows, lower highs. You got an uptrend until that pattern breaks. This is important because remember I told you about the Bank of America trade I was in, where I was stressed out that my money had gone from $5 to $12, and I just couldn't decide, should I get out, should I stay in, should I get out, should I stay in? Dow theory tells you when to stay in and when to get out, because as long as the market is making higher highs and higher lows and then higher highs, the uptrend continues. You put your stop at the previous higher low, because if price goes below it, guess what? Trend's over. You can't call the top, but you can tell when the trend has ended, right? So I use Dow theory to confirm a trend has changed, has begun, and I use it for my stop placement. So it's super cool, right? Takes 3 data points to begin a trend, high, higher, low, new high. After it fails to put in a new high, takes out previous lows, trend is over. Just the same thing with the downtrend, right? Low, lower high, new low, trend's beginning, very high probability. On it goes, lower lows, lower highs, lower lows, lower highs. Uh-oh, took out a previous high, didn't put in a new low, trend's over, right? It's heading back up. That's how waves change from 3 to 4 to 5. Okay, you can tell. So it's useful to tell when a trend has changed. I look for compound evidence. So if I see Dow theory, if I see a really good wave count, right, where a price has moved dramatically and then corrected, and now it started to turn, I'm starting to watch Dow theory. Do we have a high, higher, low, new high? Do I have price breaking through the Ichimoku cloud? Right. So I layer these things on top of each other to build a high probability case for what's going to happen next. I'm a directional trader, swing trader. I don't take long-term trend, mature trends. Nothing scares me more than a long-term mature trend because I have no idea how much longer it's going to continue. I want to get in at the beginning, so I'm a swing trader. Catch the initial move, catch the correction, catch the continuation. Those are the setups that I'm interested in. All right. Walla, how to set up scanner for crosses. I don't look for cross. I'm going to show you how I use my scanner in a little bit here. I use Ichimoku Cloud and TradeStation radar screen, which similar, TOS has similar function. Most legit platforms have some kind of table-based scanning thing. All right. So I said I think to be consistently profitable, you need these three things: great trade setups with high probability outcomes, and we talked about what I look for, and you got to have a great reward to risk ratio. And we'll talk a little bit more about that on the charts, right? But you got to make sure that the potential for the trade to win, right? The amount it will win if it wins is substantially more than the amount it will lose if it loses. You got to have risk management. You got to control loss, right? You got to control if the trade loses, how much will I lose? That is such a critical. If you're not doing that yet, right? I can pretty well guarantee you're not going to be a consistently profitable trader, even if you get a bunch of wins, right? If you're not controlling the downside, I guarantee sooner or later there's going to be a trade come along and it's going to take a bite, right? It's going to be an enormous setback. You got to control that. I'll bet, can I get a witness, right? I'll bet there's plenty here on the call who have in their learning process have not used risk control and have taken a big hit, right? And I'm raising my hand too. Absolutely, right? Absolutely. Everybody's typing in, right? You can't see all the comments because there's a function on the chat box. The default is all panelists, so only I see the comments. If you change that to panelists and attendees, then everybody see the comments. Your choice. But lots of people are typing in there. They've looking around sheepishly. Right, I've done it. Absolutely. Let me show you this model that I built. I'm pretty excited about it. I'm a total Excel geek. I admit it. So first, I run a live trading room, right? And so here's the results from my live trading room last year. And, we did pretty good. We made a bunch of money, right? 66 trades, 32 wins, 34 losses. We had a 48% win rate, right? But guess what? We were profitable. We increased the portfolio 35.2%. So on average, my 6-year average is about a 60% win rate, right? But I've been a little skeptical about the bull market, right? And I think we all should continue to be a little skeptical. So I continued to take some shorts and they didn't do as well, right? It's fine, right? Payout ratio 1.8 to 1. So my wins were nearly double my losers, and that's why I was able to be profitable, right? That's why I was able to be profitable. So let me show you this other model that I built, which just helps, I think, explain why risk control and having an edge is so critical. So let me show you how this works. So here's some assumptions. We got a $50,000 account. We're using a 2% risk rule, which means not, it doesn't mean we only put 2% of our account into any given trade. It means we're unwilling to lose more than 2% of the account on a trade, no more than $1,000 loss per trade. And so I've set up a random function so that, I'll show you how this works, but there'll be a random loss between $100 and $1,000 on a loser, which is pretty much in line with the results I just showed you. We're actually trading, right? And then we have an edge, right? We have a 60% chance of winning. So on any given trade, when we enter a trade, put an order on, get into a position, right? The ultimate outcome is unknown, right? If you don't accept that, you should question whether you should be trading until you can wrap your head around it. The outcome is unknown, right? It could win, it could lose, right? In fact, so I say, we got about a running 60% win rate. So I'm going to say every trade, based on my setups, there's an edge, there's a probability of the thing going the way we want. So every trade has a 60% chance of winning, and we'll randomize the win amount between $100 and $3,100, which is consistent with the results I showed you from our actual trading and from my stock pick service, right? You notice the winners are bigger than the losers, and that's intentional, right? That's incredibly intentional, that we're only going to pick trades that have the potential to win more than they would lose, right? That have price targets that are, 1.5, 2, 3, 4 times farther away from the entry price than the stop price, right? So we're very intentional. We're able to get those results. We're able to keep, if I showed you the results, right? This was good. We made good profit, right? Wasn't my best year. We kept the winners on average double the losers, 1.8. So we're able to actually do it. It's not theoretical, it's real, right? So, but what the model does here is I've randomized it. So I got 50 trades listed. And if Excel will generate a random number. So I said 60% chance of winning or losing. So every time I toggle the sheet, right, I just press F9 and it recalculates the whole sheet, right? What it's saying is Excel picks a number between 0 and 1 randomly. So anything at 40 or less is a lose. Anything at 0.41 and above is a win. That's 60%, right? 60% of the random numbers are going to be a winner. So if I toggle through this thing, it's picking winners and losers, and then it's randomizing for a win. It's between $100 and $3,100. For a lose, it's between $100 and $1,000. And we come up with a P&L, right? And it's actually, this is very reasonable approach, because we have an edge, we have a demonstrated edge, we're using risk control, right? We're using high probability trades with higher payout potentials, right? And so what I can do is sit here but what it demonstrates is, though, even when you got an edge, even when you're following all these rules, there's some random variation in your trading that you have to expect, right? The market is not a machine that you wind up and it runs, right? Is a complex organism with millions of participants and some degree of random variability. What we want to do is be able to test with my trading system, given random variability, am I still going to be profitable, right? Even within that random variation. So if I recalculate, this green number here is showing me the overall P&L. It's always 50 trades. Here's the win ratio. Here's the payout ratio. On this chart, you can see this red line is 0, break even on a trade. These are losing trades. To the right are winning trades. And what it's doing is saying for each of these price buckets, from 100 to 249, 250 to 399, right? We just bucketized and then weighted these. How many wins times the average win in that bucket, right? What's the distributions of winners and losers by dollar? And then I can just recalculate, right? So that was a pretty good run of $46,000 gain over 50 trades in a $50,000 account. That's about a year's worth of trading, maybe about 9 months to a year. So let's do it again, right? And not so good, 30 grand. 48% win ratio, a little under, right? So even though we're randomized to have a 60% win rate, there's normal variation that goes, there's going to be some distribution around 60, sometimes higher, sometimes lower. The point here is, does the system produce profit within expected variation in the market, right? So that one, that's not a very good year, only 20 grand, right? 46% win rate. Wow, that was awesome. A 60% win rate and a 4-to-1 payout ratio. We were really profitable, right? And if I just keep doing this, what you'll see is, right, it's always profitable. And this is using my actual trade statistics. So sometimes it's wildly profitable and sometimes it's okay. But by using risk control, by having an edge of 60%, and by only taking trades that have a potential to win more and making that be real, you can see we're consistently profitable. There's variation in it, right? And we shouldn't be surprised, right, if every once in a while, look here, we get 4 losers in a row. So I know some people join my trading room, they join my pick service, and they just join and they're excited and they jump in and they take their first trade and they go, oh, it lost. And the next one lost. Your system doesn't work. I got to bail. Well, there's random variation, man, right? The market's not a wind-up toy. But the system works, right? But you got to stay with it. And so the other thing that I think this demonstrates so well is that I run into an awful lot of traders who, there's this maximum you'll hear. It's a cliche, right? It's cut your losers soon, let your winners run. I'm sure you've all heard some variation of that, right? Cut your losers early, let your winners run. Well, this table this model is showing you the importance of that, right? You absolutely have to get out, right? The only reason this works is because of this tilt, right? The fact that the losers are smaller in number and in impact than the winners, right? And what you do is, if some people will get into a new trade and $50,000 account goes up and you got $1,000, right? And they'll, oh, I don't want to give that away, and they'll bail. They'll bail in the trade. What does that do to your statistics? If you get excited and you got $1,000 win, and you bail out and you go ahead and close it because you don't want to give it away, what does that do to your performance over time? Well, what it does, I'll draw another line here. Let me just copy this line. You truncate the results here, right? And say you're going to bail every time you get $1,000. You're going to bail. That means everything to the right of here doesn't count anymore, and you don't get that. And guess what? You may win that trade, right? But over time, you're going to be a losing trader, right? You're absolutely going to be a losing trader. Look what happens if we continue. If you keep taking profit at $1,000 on this account size, what happens, right? You lose money. You absolutely lose. It feels good to win that one, but you're missing all the big profit that actually makes the whole model work. All right, so you can't do it. You just can't do it. You got to be disciplined, and you got to have a strategy, and you got to have a method, right, that allows you to stay in these trades, right? And we have that, and that's trade management. So wasn't that a fun model? I don't know, Excel geeks unite. Yeah, absolutely, we scale out. So let's talk about the next big deal here, and risk management. We just talked about it. You gotta determine how much you're willing to lose on a trade. It's got to be a pain-free level, right? I use 2%. And then the third thing here, right? You got to have great trade setups. You got to have risk management. You got to have trade management, right? So great trades management includes scaling out, taking profit at the right times, adding to the position strategically. So I've got a method of adding to a position without increasing risk. It is awesome. It's called the magic of math. It's kind of like the blackjack play, right? Any blackjack player knows, if you get an 11 and the dealer's showing 5 or 6, man, you double down every single time. Why? Because the probability of the trade just increased, right? The probability of winning just went up dramatically. So now you can increase the potential payout. So doubling down in blackjack is a wonderful idea. Doubling down on losing trades is an awful idea, and a lot of traders do it. And they well, I want to lower my cost basis. Yeah, great. Lower cost basis for a losing trade. If the trade's going against you, hold off, right? Is my advice, and see if it comes back. But don't increase your risk. Don't put, because we calculate our risk initially when our first entry into this thing, and if it goes against me, I'm not going to go increase my risk. It would be it would push me outside that line I just showed on that model, right? Terrible. So, but if the trade goes my way and I'm in profit and I've moved my stop, I have a formula where I can go add to that trade and the risk does not go up. That's beautiful. And then if it does win, it's going to be off to the right on my model, way off to the right. So it's really cool. You stay with the winner for as long as possible and you exit the trade at the right time. Here's a great chart, a little busy, but I told you I use Dow theory, and we've got the Bennett McDowell's applied reality pyramids here, and they are wonderful. They're a great indicator. They match well with Dow theory because we get higher highs, higher lows, new highs, and it paints a pyramid on the significant ones here, right? So when I get into a trade, my entry would be here. You can see where it says wave 3 entry. Right as a new trend is forming with a high, higher low, new high, breaking the Ichimoku cloud. Wow, I'm going to take an entry there, and then I'm going to put my initial stop under this previous low. And then as the trade plays out, I'm going to trail my stop up to new significant support levels and ultimately get stopped out. Then here comes the correction. We don't sit through that, right? And then the continuation, wave 5, high, higher, low, new high. Boom, we get in. Here's our stop, and we trail the stop up. And then we also take profit as it crosses Fibonacci lines, key lines, and at key reversal points in profit. Now the target up here is between these two green lines. I'm not going to bail just because it hits the target. The reason for having a price target is to see if the reward to risk on the trade makes sense, if there's enough profit potential. But I'm not going to arbitrarily exit just because it hits a target. That trend may continue. I'm going to stay with it for as long as it goes, and it will announce when the trend's over, right, with a reversal and new lows, in Dow theory. So that's how I do it. That was a lot of stuff. It was kind of fun, though. Now let's go find some trades, right? Now that I've explained what I'm looking for, kind of the theory behind it, let's go find some trades. Everybody ready? So what I do is I create a big picture first. I just stand back and look at the market. I'm a news junkie. I follow what's going on. I got a trading room. I'm in the markets every day. So I kind of got my finger on the pulse of what's happening in the markets. So, and then I go, what's going on? I think about it. And then I create a thesis. I go, I think this may be true about the market or a sector of the market. A thesis is a, scientific guess, right? It's a statement that then can be proven or disproven. And then I narrow the list down based on that thesis to a manageable list. Then I go look at charts, and my thesis may be proven. I go, wow, that's a rich vein, man. There's a bunch of great setups there. Or maybe disproven. I thought that was happening, but it's not. So I don't trade based on my thesis about what I think is going on in the market. I use what I think is going on about the market to direct my attention to particular areas of the market to go take a look. But all my trades are going to be based on my trading system, my rules, the exact realities on the charts when we look at them. Right? Not a supposition or a guess about I think this is going on. All right. So then I start scanning for trades. So as I stand here and think about what's going on in the market, anybody that's been following the market knows this, right? Let's consider oil, right? Let's look at oil on a daily chart, and let's change to the continuous contract, because this one won't go back far enough. And let's go look at it on a daily chart. Here comes the data. Daily chart. Wow. Since last summer, oil has been on a absolute rip, right? From, ultimately July down here at $44 a barrel crude oil futures up to 64. That is a monstrous move, right, for oil. And if you look at it on a weekly chart, you go, and it's just getting started, right? This thing's been up 140. It's actually been up 200 on a weekly chart. This thing could correct up into the mid 80s, right? That's phenomenal. Will it or not? Probabilities, right? Probably this is a correction from a previous down move, right? And simple enough to measure what the high probability move is, from that previous down move. We got a probability of it getting up here to the mid 80s. Okay, it won't be smooth, but that's certainly interesting, isn't it? So if I think oil's going up, what should I do about that? Well, who would benefit? How about oil production and drilling and oil services companies who I know from my participation in the market? Wow, companies like Halliburton and Halcon and Whiting Petro, they've been beaten to death, right? They've been beaten to death. Or maybe they're going to be bouncing back. So there's a thesis, right? I don't know if it's true yet or not, but now I have an area of the market to go look at. What I did was I wrote a scan. We did this. I was teaching how to scan, and we wrote this one Thursday night. So what I did was I said, the symbol universe, what I'm interested in here is oil and gas integrated operations, well services, blah, blah, blah. This gives me about 500 to 600 stocks to scan. And then I said, well, I don't want penny stocks. I want, I don't mind low price, but I want above $2. So their price is above $2. I want some liquidity. So average volume on 10 days, at least 200K. I want, real companies. So I want a market cap of at least, $500 million. And then, right, we know that they got beat down. So I want the ones that got beat down pretty bad. So the last year versus the S&P 500, I want the bottom 50. And then I'm looking for ones that are breaking out. So the last 4 weeks versus the S&P 500 top 10. That was my criteria, run the scan. Of course, I'm going to get 10 symbols, right? There they are. So now I can go look at these things on a chart and see if my setup's met. What's my linkage here? It's blue. Okay. Blue global. Okay. So let's go look at these charts. See if any of these look good. And then we'll take a look at yours. DNR. Isn't that exactly what I was looking for? Pretty much, big drop, and now it looks like it's coming. Now, as I study this chart, it kind of tells a story, right? Had this massive drop, looking for a correction. It had a fail, right? It failed once, pulled back, lower, pulled back again. It's got this nice fry pan. So this could be a go, but rather than measuring, right, the full retracement of this thing, the full Fibonacci retracement from this move down would actually be up here at about $5. Actually, this works. So this blue lines are the Fibonacci retracement zones. What we do is we set a target, a price target at the low edge, and that coincides with being just under this previous high, which it could fail at. So now the question is there enough profit from 243 to $4? And in order to answer that question, you got to go, well, my entry's here, right? And my stop, remember I talked about it, high, higher low, new high. Here's a higher low. This is where my stop would be, right there, under that higher low. Now I can just kind of visually see, right, this trade has a good reward to risk ratio, because here's my entry and here's my risk, and here's my entry and here's my reward. This is like 2 to 1, right? I actually have a formula for doing that. I have a spreadsheet, and we can actually calculate it exactly, but we can eyeball this and just go, that's a 2 to 1 trade. If it wins, it's going to make double the money on the win than if it lost, right? Say it's our $1,000, $50,000 account, we would put $1,000 at risk, right? If it wins, it's going to win $2,000. Sweet. So there, that one, number one, first one we brought up. So that was a pretty fruitful scan. I dig it. So DNR. It's a suspicious abbreviation, isn't it? Now I would do a few more things in terms of diligence on before I go just trade this thing, right? When's earnings? Are they any M&A pending, right? Stuff like that. I don't care about the earnings. I just want to know when, right? I don't want to be surprised by big news that's going to interrupt my trade, right? So that's a pretty good one. Let's go back to the scanner. I like it. DNR. EPE. EPE, I never heard of them. Now this one's interesting too. Oh, by the way, you can see I got the 200 simple moving average. That can be a potential resistance area. It's one of the most popular indicators in the market. So we got it on there. We pay attention to it. So the retracement on this one would take us up here, right? It hasn't broken the Ichimoku clouds. We got a high, higher low. So we wouldn't enter this until here. And by the time we get into this, the stop's going to be here, and it may hit this 200 and fail. So it's got the thing going on we were looking for, the big move down, starting to break out, right? Not sure there's sufficient profit, and there's a big potential barrier there. So I'm not as excited about that one. ESV. This one's already running. It's up above the 200. It's up above the Ichimoku cloud, right? The full retracement, I looked at this one before apparently. The full retracement is up here into this Fibonacci retracement zone, these blue lines. The midpoint at 1584, we're sitting here at $7, right? And this thing could also fail at this previous high. I'll get my drawing tool work. There it is. Could fail at this previous high. So we just quickly go, it may make it up into that target, but it can also fail. So let's just do a quick visual reward to risk on this thing. We'd have our stop here. Blow that up so we can kind of see the scale. Well, that's what, 1.7 to 1, 1.8, something like that. Probably not quite 2 to 1, but that's not bad. So ESV is not bad. Make a note of that. Love the volume. 10 million shares. Probably got a very deep active option market because now that I got a direction on this thing, I actually want to trade it with an option. That's how I like to trade. Buy the shares. I just like to go long the calls. I got a whole method for, you know, a whole statistic-based method for that too. That's another day's presentation. I'm going to refill my coffee here. Good time to, if you got any questions, go ahead and fire them off. Carol, it'd be better to see it on a light background. I'm sorry. I like the background. You know, I spend a few hours a day looking at these charts, and the white, it just starts to bother my eyes. So this is just a little easier on my eyes on the black background. You know, 55 years old. My eyes start to, you know, like a lot of us. All right, I'm going to let's look at a few more. Amy says, I understand you. Yeah, feel me. NBR, let's look at this one. Criteria on my scan. You know, I went through it. There is a recording, so you can go back. And the 200 SMA. Yeah, this simple moving average is 200. Look at NBR. So we're just concerned with this big move down here. Remember I said Elliott wave so easy. Some people make it so complicated. It's not, right? There's a big doggone impulsive move there. We expect it to retrace, right? After a big impulsive move, it quite often retraces to a Fibonacci zone right there. That's it. Nothing complicated about it. And by the way, it's up above the Ichimoku cloud, and it's up above the 200. This one's a go. Now, you know, I say it's a go. It is. But also, guess what? Price doesn't move in a straight line, right? It moves in higher highs and higher lows. And this has been a higher high, a nearly linear move. This will not continue forever. Even if it's ultimately going to end up here in the target zone, right? It's going to do this. It's how price moves. It's how it moved down. Something like that, right? Price never moves in straight lines. And that's how it's going to move up. It's actually awesome because it gives us a place to trail our stops to. Okay, so you get in here, it may reverse, right? It may reverse. This one, the awkward thing about this trade is the only legitimate place for your stop is down here, right? So you may want to wait on this one, on NBR, and let it do its thing, do this, and get a clear reversal, back up, take an entry there, put your stop there. That would be the cool thing to do. Got it? It's my thoughts. Again, each person makes their own decisions. That's how I would trade that thing. And let me jump to the last one. It's really good. I like it. WLL. This is awesome. What do I like about WLL? We got a target up here at 50 bucks. We got an entry right now just above prior high, right? Just above the 200 SMA. It's well above here. We got a nice stop, right? Look at the reward to risk on this one. Here's the risk, entry to stop. The blue line's my entry, the red line's my stop, the green line's my target. Try to keep things simple, right? This is about 3 to 1. 3 to 1 on Whiting Petro. And this is actually setting the target at a previous high. The full-on retracement is almost too much to believe, right? The full-on retracement would take us up to unbelievable levels, $200, right? Will it do that? I have no idea. Could it push up to a previous high? Sure looks like it, right? There's a high probability of pushing up to 50 bucks. Higher high, higher low, higher high, higher low, higher high. positive momentum above all resistance areas, right? Yeah, when I look, what's the time scale between waves? People ask that a lot. You know, what's the right time scale to begin? I like to start when I'm looking at Elliott wave with about 16 to 18 months of data to look at a particular chart and see what the big picture is, and then zoom in on it, right? Daily charts, I start 16 to 18 months. What's the graph on the bottom here? This is a price oscillator called the OWL, Optimum Wave Locator. It's made by traderscoach.com. It's a very helpful indicator to show momentum, to help in wave count, to show bullish or bearish divergence, lots of things to use it for. Yeah, so energy was a great sector to look at, right? And I just shared with you one of my favorite trades right now is Whiting Petro. I'll share one more of my favorites, and then we'll move on to looking at your trades. So take a quick peek. We're in Halcon. It was up 6.75%. Here's a look at this. Look at this ridiculous chart, right? This ski slope, and then this thing's down here in this channel, right? We're actually trading down here in this channel, and you have to blow the magnification up to see what we're doing. But when you do, it's unbelievable. This is a trade we're trading in my trading room, and it's awesome. So we got into Halcon. Look how much I have to blow it up. We got into it at 738. It's sitting up here at 854. We got a target at 1125. We've moved our stop. Remember? Higher high, higher low. Higher high, higher low. We've trailed our stop. And the reason it's blue and red here, stop's sitting at our entry. Our stop is equal to our entry right now. That is a great trade. Let me see if there's another one that still has good in. You can still get in. Still room to get in, unbelievably, right? Stops here, you can get in, plenty of room up there. So that's a really nice trade that we're in the trading room. Okay, wow, a lot of time has gone by. I will be happy now to take and look at any of your symbols. I know there was some earlier. I can't get back to them. So if you had one you really wanted to look at, go ahead and type them again. JCP for WM. Look at that. It looks almost like energy, doesn't it? That looks good. I would wait for it to break. The 200 is probably the most popular indicator in the market, and so many people are watching it that I would, they're going to react on it. So I'd let the price break, and if it does, you got a nice price target here on JCP, which is hard to believe, right? You think about them, you think about like Sears and stuff, and you go, these guys are going to really stay in business. So you get, yeah, only you can answer that question, what you believe about that. The technical here is this thing could go up to 687, and you can get an entry here at about 4.25. That's a pretty nice trade. So, boy, you guys fired. There's no way I'm going to do them all. I'm sorry. PIRS, I'll get through as many as I can. I'll do at least 10. Yeah, so what a beautiful trend this is. And I said up front, I'm a swing trader. I'm not a trend trader, and I do not join mature trends. And this is a very mature trend, so I'm not interested in joining the upside trend here. I would be interested if and when it begins a correction down. Again, Elliott wave is so easy. Is there a big impulsive move on the page? Of course there is. It's this, right? From nothing to boom. Now, it's volatile. It's had some fake outs. We would have thought a correction was beginning here. It broke the cloud, and it didn't. 200 protected us. So it's got to get down through both Ichimoku cloud and the 200, right? By then, the question would be how much price is left, right? And there's not going to be much. The retracement from the current chart would take us to where? Yeah, right here. So by the time it breaks the Ichimoku cloud and the 200, it's already in the retracement zone. So at this moment, not super tradable for me, but fun to look at. Yeah, Riot. So Riot is a blockchain, Bitcoin, crypto thing. So we finally got to look at that. Wild ride, right? Nothing forever. And if that'd been a EKG, they would have hit it with the paddles, and they did. And look at it go. All you gotta do is put blockchain in your company name, like Kodak did on Friday, and your stock will explode. So look at this. Big impulsive move. It's corrected exactly where we expected it to. Here's the Fibonacci retracement zone. We got one green price bar. So if this reverses, if it takes a handful of price patterns to prove it, right? We need a high, higher low, new high, need to break above the cloud. So it's not there yet, but if it does, it's got a nice target up at, you have to grab the tool before it will work. Nice target up above 44. More has to happen before we could trade that, but not bad. HSY. Hershey. I'll just use one word, edge. Right? I need an edge in my trading. I need a probability of outcome. Right? Hershey is swinging all over the place. It is a mess. This looks like chocolate fingerprints on the fridge, man. That's pretty good for talking about Hershey, huh? That's a mess. There's no edge. I can't tell what it's going to do now, so I don't want to trade it without an edge. Sorry. Like you, but that chart, I can't touch that. Dimitri, ACAD. Is that it? ACAD? Yeah. Nearly the same chart, isn't it? And see the big move, nearly 100% retracement. Big move, nearly 100% retracement. I mean, if you think it's going to continue, maybe that's a pattern, but there's just no edge for me. I just cannot come up with the next pattern, right? Because when they retrace too deeply, they've broken all the rules for Elliott wave. So that's another thing that, you know, is important about Elliott wave is not every chart that you look at is going to have the pattern. So we just want to find the ones that do, right? Because I believe there's an edge in that hardy dollar tree. Very similar to the one we talked about before. You know, beautiful trend. I would have, you know, I'm interested in trading the breakout here when it broke the 200 and all that stuff. Looked like a new trend was forming. You know, I'd like an entry at 80 bucks. I don't want an entry at 114, you know, 6 months later. The next move would be the retracement, and we'd have to see if that made sense. But it's not, you know, it's a beautiful trend still going. Too late for me. Too late to go long, too early to go short. Fun to look at. Nancy, I'm just going to grab one of yours. I'll grab the first one, HUN. Same story, exactly the same story, right? It's just continuing into a beautiful, mature trend, not the kind of setup I'm looking for. Fun to look at. Joseph, WMGI. Maybe. So here's the big impulsive move down. It's starting to work its way up. Same, we looked at a few others. By the time it breaks the 200 and the Ichimoku cloud, probably not enough profit left there. Bill is asking about GE. Now, GE is interesting. And Bill, you don't happen to be from Tumwater, do you? Tumwater, Washington? You have the exact same name as a pastor friend of mine. Western New York. Okay. Hey, GE, you know, what a story it's been, right? A once storied company totally losing the mojo, right? And getting crushed in their stock price here. But it looks like it could be getting ready to turn around, right? Could be getting ready from a stock. You know, I have no idea operationally if GE's turning around or whatever. Their stock looks like it may have found a bottom. Right? It's got a nice little minor high, higher low, new high. It's in this cloud. It has to break out. And, you know, we have to have enough room before it would hit the 200 to make sure we have a trade, potentially if it reversed there. But there may be a trade coming up long on GE. Yeah, all they got to do is put blockchain in their name, Robert. Yeah. GE blockchain turbofan engines. It'll be 200 in a day. Yeah, Bill, for me, it's too aggressive because, and look how thick this cloud, this is a potential resistance area, could fail at any time inside there. And it really hasn't, you know, we got a minor higher high going on here, but it really hasn't taken out the major moves, the major low, lower high, right? Low, lower high, low, lower high, low. It hasn't taken out a key level here, right? So it really hasn't proven that it's turning around yet. It's showing some early signs. That's where having probability on your side, right? Is to wait. I got a watch list here. I'm sitting here on trades that look good, right? We've got 20 plus, right? I'm waiting. They looked good in a session like this or a scan I was doing. Waiting. We waited on WLL for months before we got the good setup on it, right? That's the kind of thing that's going to make this model that we showed, though, this super fun Excel sheet, right? The only way this model is going to be consistent and work, and no matter what the outcome, right, you're going to be profitable. The only way that works is if you actually only take trades when they have the setup criteria met, that you actually do have an edge in your trading. All right, well, I was hoping to do this in about an hour. We're a little bit over, but it's been fun. You guys have asked some great questions. I'm going to start winding it down here. I could go on looking at symbols all day. You guys are great. So let me just recap here. We found some really good ones, right? We found DNR, ESV, and I showed you WLL. Those are three amazing trades right now, all in the energy sector. So in order to be a consistently profitable trader, I think you got to have great trade setups with high probability outcomes, great reward to risk ratios. You got to have risk management. You got to control that downside, and you got to have trade management, right? Again, you got to make this model work. You got to make it work so that no matter what the outcome within, random variation, that let me get rid of this awkward line, right? That the losses always stay small on this side of the chart and the winners always stay big on this side of the chart. And then no matter, within expected random variation, we don't know exactly how much we're going to make, but we do know we'll be profitable consistently over time. That's what makes the model work, is following these great trades, risk management, trade setup. All right. Do you agree? Do you believe having these three things in place in your trading will make you a profitable trader? I just wonder. A few of you type in there. Raise your hand. Now where you can press the button. Press the hand button if you agree. Oh, look, there it goes, man. We got hands for days. Good. Good. People typing in. Awesome. Okay. So what do you guys think about those trades, right? We got ESV, DNR, WLL. Anybody thinking that those look good? Maybe you want to add those to your portfolio? Maybe are you excited? I kind of liked that. I'm not sure what to do and how to manage that trade. Maybe. Do you feel like this dude? Right? It's like, wow, that was a ton of information, right? There's no way I can absorb all that. Well, if you don't mind, I'm going to take a couple minutes and just go over a special offer, a way I can help you, right? That's what we just talked about. I mentioned a live trading room, a pick service. I've got both of those, right? I'd like to just share an offer with you guys about that. These things are essential. Great trade setups, risk management, trade management. We've covered that, right? What's it worth to get that kind of information? My pick service is averaging year to date, 2017. If you had a 100K account, it's about $1,900 a month in returns, right? Using that model, not every week is a winner, but over time, it's very profitable, right? If you were to go book 4 hours of detailed trade consultation every month with an expert, right, it's going to cost you a lot of money. If you're going to get one-on-one consultation, 4 hours of detailed trade consultation, like in a group setting. If you want a one-on-one session with a master trader, it's going to cost you probably $1,000, right? Ongoing education, courses, easily $1,200, right? Just to add up those kind of things, that's like $5,300, right? Just to get some help and moving forward in your trading, using the techniques that I've talked about here. And I'm going to offer you all those things, right? Great trade setups, risk management, trade management, regularly daily consultation in the trading room or weekly consultation in the pick service. It's not going to cost you $5,300, right? Barry says, what size account? You can trade any size account you like. If you're going to follow along in my services, they cost money. I think they're a good deal, but they cost money. I recommend at least a 10K account if you want to generate, growth in the account, generate returns. At least 5K if you're there to learn and grow it to the account where you'll be profitable. So 5K to get in and learn, at least 10K to expect some returns on top of the subscription fees. Those are my guidelines. So here's a special offer, right? I got two main services: live trading room, right? And you can try that for a week for $7, or you can join my pick service. The trading room, you got to be there, right? It's an hour and a half, Monday through Thursday in the week. To get value out of it, you got to be there at least a couple times a week. It's recorded. The results are posted on the website. But trading room really is intended for participation and attendance. Hey, if you got a day job or something you can't make it, that's all right. I got a stock option pick service where I put them on the website. I send email and text alerts for trades. You can try that for 30 days for $37. So let me pop those links for you. And if you're a phone kind of person, you see down at the bottom of the page, you can just text trial to this number, 360-310-4171, and you'll get the link. Both links. Sort of cool. Let me get the links posted. So there's the trading room link. Copy, and here is the picks link. Yeah, so now there's some details here on the other page. There's the text trial. That's a new thing I'm trying, so let me know if that's cool. So the live trading room, you try it for 1 week for $7. Everything I do has a money back guarantee. If it's not your thing, let me know. I'll give you your money back. No questions asked, no hard feelings, right? After the 1 week, it's $59 a month. As long as you have a current subscription, you can cancel anytime. There's no commitment, right? Again, it's Monday through Thursday, 6:15 to 7:45 Pacific. That's 9:15, 10:45 Eastern. We pick out winning trades, kind of like this. I'm looking for trades. I'm sharing them. We're taking them. I'm taking them in my account in front of you. We analyze the overall market. We give training, live Q&A. You got a community that you're part of who can answer questions. There's a Facebook group for those that like that. Or during the session, people answer each other's questions and help each other out. It's a really good community. So you can get it $7 for the trial, $59 a month ongoing after that, which is a discount from the list price of $79. The pick, stock and option picks, if you're not able to be in the trading room, 30 days, $37. Again, money back guarantee. No hard feelings, no questions asked. And then after the 30 days, you pay $97 a month. And again, money back guarantee, cancel anytime, no commitment. And it includes a free one-on-one consultation with me on the phone. I got great picks that have great entries right now. And so you can click that link in the box, and let me post those both again. Or you can text. I'm super interested to see how many people use the text thing, if that's cool. So there's the links, or you can text trial to 360-310-4171, and your links will come to your phone, and you can place your order on your phone. Carol would like to do it 3 months from now. Hey, I run these things, this Saturday thing, about once a month. So just watch your email, Carol, and come back and check it out. Nancy, very nice. You can see Nancy's comment. She made it public there. She just started. She really likes it. That's awesome. Josh, you fell asleep. Can I do a chart of SPY? SPY is going up. No change, man. The bull market continues. Barry, it's not day trading. We look at intraday futures for market direction, but the actual trades we place are stocks and options on a little bit longer term charts. We'll take some short term, and short term for me is a week or two. Most of the trades are going to be in them a handful of weeks. Deshaun, do I have a course? I do. I do have a course. It starts on the 25th. I run a 6-week course. It's called Master Trader Small Group Training. We just wrapped up the last one. Awesome program. A lot of people really, really like it. Robert, does either service include the other service? Once you join, you'll be given the opportunity to bundle, right? So you can bundle them and get a discount, get both of them in a bundled package for a discount. less than the total of the two. Robert is the answer. Ziping, how come the trading room is cheaper than the stock picks? Well, maybe I should raise the price, huh? Maybe I should raise the price. There's several reasons for it, right? And how you price products. There's Jack. Jack has been there. You can see his comment. He's been in the room since day one. In fact, Jack just did we're starting to let room participants have a little time slot, and Jack did a great presentation for a few minutes last week. Chase, is there recording? Yeah. Assuming the technology works, which it mostly does, it'll be recorded, and I will get it sent out to everybody who registered within a few hours. Got it, Josh. No worries. Okay. Well, hey, thanks for being here. For most people, Saturday morning is, that's valuable time. That's your weekend, and I'm just honored that you would come spend it listening to what I had to say and join me here. So I hope you found it useful. I hope it met your expectations and you learned something, and you thought it was worth your time. We'll see you in the room, those participants who are members. It'll be Tuesday, right? We got a holiday Monday. Right? We got Martin Luther King Day on Monday, so the room will be Tuesday through Friday this week. Very good. Well, there's the links. And again, if you're interested, you can text trial to that number 360-310-4171, and I'll post the links one more time. And so I'm really done with the presentation. I'm here if you're trying to place an order, you got questions about the products, I'll hang online here for a little bit and help you out with that. But again, thanks so much. Have a great day. And whatever you end up doing with your trading, hey, be careful. They are out to get you, right? Keep your winners big, you'll lose your small. Use risk control, and preserve your account to continue trading. All right, thanks again, and we will catch you next time.